Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And it looked like the S&P 500 after closing below the 20-day moving average on Thursday was able to get a close back above it on Friday. That's a false breakdown setup on the daily chart, but is that enough to get the momentum back on the bull side? Now, besides getting back above the 20-day moving average, I bring up the 50-day moving average, that orange line here, and we got almost a perfect rejection from that moving average. Okay, so I'm gonna talk to you guys about how I traded yesterday, and I'm gonna talk to you guys about my next plan of action. All right, stay tuned and let's go. So if you guys been watching Uncle Charles for a while, you guys know my trading system already, okay? All my support and resistance levels are based on the daily and the weekly chart, but I use the 15-minute chart to execute my trades, okay? All these lines that you see are all support and resistance zones or levels that's based on the support and weekly chart, okay? But this is a 15-minute chart, okay? And you guys can see here all the setups that I usually do. Okay, what's my setup? I look for calls when it clears. Excuse me, I'll do this instead. I'll look for calls when it breaks a resistant level or a false breakdown setup, and I look for puts when a support level fails or a false breakout setup. So here you go. SPY opened up here, tested a resistant level that I had, okay, around 377.5 to 378 zone, broke down the 376 level, that's this orange line right here, or the 375.5 level. I was watching both these as a zone, broke it down, and look where lower drop on this candle was 372.25. I had a level around 372, but I play it level to level, so the 374 to 373.5 zone is where I would have took profit and left a runner level to level. Okay, now when do I buy calls? I buy calls on false breakdowns or the clearing of resistance, which happened right here. False breakdown. You see how we broke down that 374 level and then recaptured it on the 15-minute chart, and it hit our next level right here at 376. It broke 376 on the 15-minute chart, right? And then it went up and hit, it went as high as 378.85, but I had a resistant level around 378 level to level. Okay, so we broke 376. What's my next setup that I'd be watching? Okay, if it clears 378 or if it break back down 376. So it broke back down 376 right there on the 15-minute chart. False breakout setup. We cleared 376, broke back below it on the 15-minute chart. False breakout, that's when I would look for puts, and it dropped all the way down as low as 370. But I would take profits or a little bit of profits, leave a runner at each of my levels as it dropped, just to be safe. Okay, even at the end of the day, we had a nice false breakdown where we lost 372, recaptured 372. False breakdown setup, that's both look for calls. I didn't play this one personally, but it worked out right here. Now, all these amazing trade setups, but the one trade setup that stops people from believing in Uncle Charles' system, or the one trade, is this one. Okay, notice how we broke down 372, recaptured 372, but it did not work out. Okay, no trading strategy is 100%. Okay, my trading strategy is not 100%. In my opinion, all you need is 51% accuracy or better with good risk management, and you could be profitable. Okay, I think my trading system is better than 51%, but I'm just lowballing it. Okay, now like I say in previous video, if one trade setup doesn't work, you just hop on the next, because look at this. Even though this false breakdown didn't work out, when it broke back below 372, at least that tells you when to cut your loss, and you can also jump on that next setup. Okay, because that is a false breakout or a false recapture, which led back to a drop down to 370.14, which is close, right? Level to level move. Okay, so that's how I trade it. I don't take every setup. You don't have to take every setup. Okay, but that's how I trade, if in case anybody was wondering. All right, now that's day trading though. Most people that watch Uncle Charles video, you guys maybe have day jobs. Maybe you gotta take care of your kids. you have a bunch of other responsibilities, so day trading can be tough. So with that being said, as far as swings go, um, swing trading, as far as swings go, I would swing calls if 380 is recaptured. Okay, I would swing calls if 380 is recaptured. Above 380, I do have some levels that I'd be watching: 382, 383.5 to 384, 386, 388 and 390. And of course, if you are swinging, you can always do it how I do. You can swing it in the next day if it hits a resistant level or something like that. You can take profit, leave a runner. But all I'm saying is, if I was to swing calls, I would swing calls if 380 was recaptured to play the false breakdown setup, because I always talk about those setups, the false breakdown, the false breakout. I love those setups. They work out beautifully, and I think they can work nice with swing trading as well. Okay, so it would be a recapture of 380. That's a 38.2 retracement level. It will also, above 380 would also get above the 50-day moving average. So that just adds to my conviction. Okay, we're recapturing a couple of critical levels, and and plus this pink trend line that I have here, we got 4 touches. 1, 2, 3, and 4 there. So recapture that trend line would be bullish. Okay, so swing calls above 380. When would I swing puts? I would swing puts if SPY dropped back below the 20-day moving average. Okay, the 20-day moving average is around 372.59. I got the multi-year trend line at 371.6s. So if those support levels fail, I would swing puts. Of course, the next critical support I would be watching if those level fails is 367.84, which is the 23.6 retracement level. If that level failed, I would favor a multi-day sell-off to the downside. So that means I would swing puts as well if that level failed. Okay, does that make sense, guys? As far as swings go. All right. But yeah, it closed around 376. So I got resistance at 378. If it can, that's based on this pink trend line. Recapture that and recapture 380, that would be bullish. Okay, as of right now, I do have support at 373.5 to 374. If SPY can break back below that, that will put the 372 371.5 zone in play. That's around the 20-day moving average. Okay, but the 20-day moving average constantly changing every day, but it's also based on the year trend line around 371.5 or 6s. Okay, I'm just giving it a zone because the numbers, the support and resistance line, aren't always pinpoint accurate, so we got to give it some buffer. Below that, like I said, is 369. You can see here 369 to 370 zone. I gave it a zone, but you can see here the Thursday and Friday we had some Pennywise. I call it Pennywise bounces because Pennywise, he's very bouncy, or you can call it a hot stove bounce. But they was pretty much, the idea is that they were very strong and fast reaction, instant reaction almost at these level of buying pressure. You guys can see here, it came here and it recaptured 370, but when it tests 369, it was strong buying pressure. This was the fake out of NFP in the pre-market yesterday. It was strong buying pressure. As soon as it hit 369, it just bounced, and then 370 defended about 3 times on the 15-minute candle intraday. So 369 to 370 zone fail. That's another zone, a support zone that's very critical. I would swing puts if that level failed as well. Okay, guys. So that's my ideas for you guys for SPY. And if you guys want more guidance on how to execute these trades, definitely consider joining the Discord. I'll be glad to help you more there. Okay. Now here is a QQQ. It gave us a false breakout setup yesterday when it closed back below this blue downtrend line that I got. But one close below is not enough. Need to show follow through, which the bears did not show follow through. As a matter of fact, the bears got back above that 262 level, but intraday it back tested that blue trend line as a support and found buying pressure. So support I got right now is 264, 262 with 260 below. These support must hold to keep the next resistance in play around 267. Now QQQ is still below that 5-day moving average. Okay, that's that red line that I got right there. Now in a strong up move, price spends a lot of time above the 5-day moving average. In strong down moves, price spend a lot of time below the 5-day moving average. Okay, so keep that in mind. There are times when the price would go test the 5-day moving average as resistance before pushing back up. There are times where price closes above the 5-day moving average, giving us a recapture, but then the next day it closes back down. So definitely keep an eye on that 5-day moving average, because triple Q is still technically below it, okay? I got the next resistance is at 268.78 based on that 5-day moving average, but it could change. So add that to your chart and just keep an eye and track where the level is at, okay? And above that, it could possibly put 273, well, before that, 270-ish, and then 273 back in play, okay? That's triple Q. Tesla, it closed below the 213 50% fib level that I got. Needs to recapture 213 to put upside targets in play. 216, 218, 222, and 225 to 226's zone. Above 226's, I'd be a little more bullish on Tesla, okay? But as long as below 213, I am bearish, okay, with the next critical support, okay? I do got support. It closed at 207.4, so I do got support around 204.5-ish. And 201.5 but the critical support based on this triangle pattern here that I got. If I zoom out, I'll show you guys my triangle pattern based on the white lines. A breakdown of 198.5 would be a breakdown of this triangle pattern, and very, very bearish for Tesla, and could give us a newer low. Okay, guys, a newer low with support around 182.5-ish. Okay, 180, and we could get, I think, some around 174.5, 169.5, and the critical one at 165.6, which is the 61.8 fib level. All right, guys, I said a mouthful, but I hope you guys got the levels and got the setups. Let the price action guide you. Let's trade cheap style with the price action as our shepherd, and we're going to end this with option flow. This is SPY filter for 500K premiums or above, 59% in the puts, overall bearish. This is a mixture of results right here. So we got a block order of calls. November 18, 1.1 million, over 7,500 in size. Okay, but then we got a more aggressive one, a sweeps, 1.8 million, over 10,000 size. For that same day, 355. So we got, you know, a couple of big money players or institutions that's like betting against each other right now. Or they could be hedging. This could be the same people. I don't know. Okay, but that's what the cheddar flow is giving me. But overall, big money is bearish on SPY. Triple Q, 89% in the puts. Okay, seeing a lot of big money going into puts right now, especially the ones with big size. Those stick out to me. Sweep orders, November 11th, that's coming up. 248. Okay, that's CPI day. It's CPI November 11th, November 10th. One of those days. I have to double check. But do they know something that we don't know? Okay, because this, you know, tech sector has been looking very terrible lately. I might make a video on the FANG stocks tomorrow, so be on the lookout for that, guys. Tesla puts at 74%. Okay, so yeah, pretty aggressive to the downside as far as big money is concerned. Okay, guys, so thank you guys so much for watching. If you guys want more content from Uncle Charters, please consider either subscribing to my Substack or joining the Discord. I would love you guys so much. Okay, other than that, thank you guys. Peace.